Hey, I'm Jason Hartman, and I'm talking about the 10 Commandments of Successful Investing. Today, we talked about commandment number 3 last time, thou shalt maintain control. Be a direct investor. We talked about the importance of that. Today, let's go on and let's talk about commandment number 4, okay? Now, commandment number 4 is something that's kind of affiliated with the crooks on Wall Street, right? So I always say Wall Street is the modern version of organized crime, but they do have some very good things. There's some obviously extremely brilliant people on Wall Street, the quants, right? The people that really know their stuff. Literally rocket scientists, okay? If you saw the movie Margin Call, which is a great movie, by the way, the guy says, he was being asked by one of his superiors, he says, hey kid, this brilliant kid is in there analyzing the financial pools and all this kind of stuff, and he says, hey, what's your major? What's your background? And he says, well, I went to college to be a rocket scientist. Quite literally, but you end up on Wall Street because that's where the money is, right? And so we see all of this kind of stuff, right? But one of the things Wall Street does pretty well is they utilize the art and science of financial planning. Now, financial planning in and of itself is a fantastic art and science, right? When you invest in something, before you get started as an investor, or if you're already moving along, maybe you want to just take a step back and look at the big picture, right? Look at the big picture. And in doing that, when it comes to financial planning, you need to consider your investment goals, your risk tolerance. There are some people that are very risk averse, very conservative, right? They want to just preserve. And that person might want to diversify more. There's an old saying, diversification perpetuates wealth and concentration creates wealth, right? So it depends what phase of your life you're in. If you've already made your money and maybe you're a little older, you want to just preserve and perpetuate. But if you're younger and you haven't made your money yet, maybe you got to take some bigger risk and you want to concentrate. There are two old sayings that come to mind in this vein. One is the one we've all heard, don't put all your eggs in one basket, right? Well, there's another saying, and I believe it was Andrew Carnegie who said this. He said, and I don't think, by the way, either of these are right or wrong. I just think they should both be considered, and it depends on the situation, right? But Andrew Carnegie, I think it was, who said, put all your eggs in one basket and watch that basket, okay? So concentration. Now, with income property, the most historically proven asset class in the entire world, we can have the best of both worlds. We can put all our eggs in the one basket of the income property asset class, but we can diversify geographically, because there's an old saying in real estate, all real estate is local. And we'll talk about this on a future video because that's actually another commandment. Okay, so we'll get to that. But financial planning techniques. So understand your risk tolerance, understand your time horizon, understand your investment goals, right? Are you investing for cash flow, income, capital appreciation, asset protection, diversification, back to the other thing? What is the point? What is the goal of your investment, right? If you are a cash flow investor, you will naturally be a more conservative investor, right? This is, in the stock market comparison, this would be a dividend investor versus a capital appreciation investor that invests in the type of real estate market that is likely to appreciate. And I think that's pretty much being a gambler, okay? I don't think that's being an investor. That's a speculation move, right? And we'll talk about, on a future video, the 3 types of real estate markets: linear, cyclical, and hybrid. And depending on your risk tolerance and what you've discovered from thinking about financial planning, we will talk about what type of market you want to invest in. So we'll get to that on a future video, and thank you for joining me today. What do you think about this? Go to jasonhartman.com/ask or leave a comment below, and we'll look forward to seeing you on the next video. Until then, happy investing.